Hello, my name is Meek, and today I'm going to be breaking down the pool of money. So, how do I explain this? There's a pool of money that can be created out of thin air. A lot of you guys hate the government. You are very skeptical about how money works. This is one way or one system that the world has or the United States operates off of that a lot of you guys need to know and maybe we don't understand. Well, now I understand it, kind of, sort of. But yeah, I'm gonna kind of explain to you what I know of the pool of money. You're gonna see it on this big screen, not big screen. This is a small screen for me, but you're gonna see it on the screen of my iPad right here. I'm gonna break down step by step or stage by stage how the pool of money operates. So let's get into it. I'm gonna try to keep this as quick and short as possible. If I've got over a minute on this intro, but let's get into it. This is my first video, so like and subscribe. So stage one of the pool of money is where it all starts, the central banking system. So for the US, the central banking system is the Federal Reserve, and their job is to print money out of thin air. Well, not even money, I call it paper or contracts. So let's say, for instance, we're going to create our own world and or our own system that is exactly like the United States system. We're going to create $1 billion in the country of Meek, right? I'm going to put on a contract. I have $1 billion. Now remember, I just printed $1 billion, and then I just made a contract that says I have $1 billion. Two different things. Now I'm going to multiply that contract 5 times, and I'm going to go to 5 banks, and I'm going to say I have $5 billion. Take this contract. I have $5 billion. Take this contract. And you're gonna do that 5 times with 5 different banks, and you can do this with the top 5 banks. Now, this is what you call an open market operation, or I call it the bank bonds pool, because these banks are now getting loaned your $1 billion, sort of, and they have the option. They have to, whatever to do with it, whatever they want to do with it, they can do. So each bank has $1 billion, um, technically, on paper, on a contract, they have $1 billion, and then altogether they have $5 billion total in reserve. So we just created $5 billion in a span of 2 seconds. Now, there's a special thing inside that contract that you had earlier that said, I have $1 billion. Inside that contract that says I have $1 billion, there's a special key to this that says you only need to keep 10%. You can lend the rest. That is an important part. You can lend the rest of that $1 billion that you have. So each bank can spend or lend $900 million. They have $900 million of wiggle room. They just have to keep $100 million of the $1 billion. Now the banks go, okay, great. We move on to stage three, which is 5 banks, $900 million budget for each of those banks. What are they going to do? They're going to do what I call a lending pool or a loaning pool or a borrowing pool. So they're going to take 25%. That's for residential real estate people, whoever want to get loans on real estate. Commercial real estate, 30% goes to that. Those are big towers you see in the cities. Upkeep those, building nice, beautiful towers. So the city looks great. New York, Metropolis, Minneapolis, my favorite place. Businesses, 25% goes to those. These aren't just like mom and pop businesses mostly. Most of that is going to big tech companies, information technologies, those type of businesses, then to smaller businesses, consumer. I'm going to go back into that after I say all the other categories, auto loans, and then other. So that's just like extraterrestrial things that go into that 8%. But consumer slash credit slash Klarna slash early check. These have more interest. These are where most people are at because most people aren't in buying houses. Most people aren't into commercial real estate. That's way too expensive for people. Most people aren't starting businesses. They don't know what the hell they want to do, and whatnot. They want to, but they will never do it. And okay, everybody's getting out of loans, but this part right here, consumer, is a big part of the game here. See, this is credit cards. Most people don't want to use credit cards. And they're gonna go into debt and pay high interest rates because they didn't pay in full. Klarna, a lot of people gonna do buy now, pay later. This is a new one, and they're gonna end up paying a lot of interest. They already do pay interest, and sure, the business that you're Klarnering against will still get a piece of that interest, and then the Klarna itself is gonna get a piece of the interest, which is the bank, and then early check. Ooh, excuse me, early check. Those are like places where you can get, let's say you have a $200 check coming from your job. You can get that out early instead of having to wait till Friday. Those have interest, those have fees. That all goes to the bank. Now, this is the next stage, that stage 3.5 we're getting into after I go over this. So, here's what the banks get off of that 900 million that they just lent. 5% interest charged on all the others except for consumers, consumer credit, Klarna, all that. 20%, 20 to 30% interest for credit, fees and interest. So this is going to be anybody who's late on the credit stuff or didn't pay in full. Then 1% goes back to the Federal Reserve. Let's say 10%. I mean 10 million. So Federal Reserve gets $10 million paid back. And here's the key part: they pay their bills, which isn't much, and then they give money right back to the government, or right to the government, not right back to the government, right to the government, and the government profits 9 million out of nowhere from there. Boom. Next, since the banks pay back their 1% interest, they're gonna profit 6 to 25% net profit, depending on how good the consumer or how much consumer debt is or consumer interest is. Now, we skipped over a little bit of where businesses, commercial real estate, and residential real estate, where that money goes into, or where all this money goes into that has been lent out. So, 4.5 total get lent out. Let's say about 4.3 is going to be sent over to average people, the public. I shouldn't say average because it's going to everybody. The public, and the public is going to trade this money when it's going to be spent whatever, wherever and whenever, whether it was with the business or from the business to the worker or whatnot. So the public works for money or for the business and gets a salary or a check. That's part of it. Sometimes, most of the time, half the time, I don't know, it's part of that loan piece. And then you buy various things, whatever, physical human trade. That's what I call it. And all that 4.3 billion generated, excavated out of nowhere from the loaning and the bond, turns into 4.3 out of nowhere. And then it goes to the government, and then the government takes a percentage tax out of that, and the government makes 946 million from that system alone, and that is from my mock-up. This is not even the United States, bruh. That ain't the United States. That's my mock-up country. I call that me country. That's the system. But U.S. is doing this to a big scale. This number is probably much more bigger than what I have right here. But yeah, that's how the Federal Reserve and the pool of money works. So whenever we create money, that is exactly what happens. There's a million other different systems. Like, this is one way the government operates. Like, just off of this, my country just made $946 million. That's a lot of money, and that's, like I said earlier, the U.S. does that to a bigger scale, much bigger scale. Like, and that's just one method. Imagine the other different systems that are set up, how much money the government profits and is able to distribute around America. But yeah, it's very fascinating, very cool to know. So now you know how to pull the money in Federal Reserve work, how they print money, where that money goes when it's printed, and how it's not just spent on whack. Well, it is spent on whack, but yeah, that's how it works, guys. Thank you guys. Thank you guys for watching, and stay tuned for the next video. Goodbye.